Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is CPI Live. Today, we're going to cover the United States Consumer Price Index. We're going to talk about exactly what that means. We're going to show you probably, I would say, 2 or 3 different trades that I'm looking at. I really like the ability for us to get in there and make some trades on our 920 EMA crossover. I want to thank everybody that joined us yesterday for the 9 EMA Trading Strategy Workshop. Pretty good workshop. It was really clunky. I sort of apologize. It probably wasn't the best day to try to trade the 9 EMA when everything's slow and rotational. But we got in there and showed you a trade and got it done. Wasn't a very good one. It was a losing trade, but that's just the way that it is. So how is everyone doing out there today? This is going to be our final live stream of 2025. We'll be back in 2026 early on January 2nd. So check your local listings. As far as what we can really expect out of this number today, I think that you're going to see a robust inflation number. We had a big address last night from President Trump. He lauded the administration's accomplishments over the past year, said a lot of things that most people sort of question. But as far as any market movers, no. There was no war talk. There was no anything. So it was interesting. It sort of turned out to be a nothing burger. We were ready for it. It just did not quite develop. So let's get right out to price action here. This is what we're looking at. I'm watching this one closely. This is the U.S. dollar Japanese yen 5-minute chart, 920 EMA crossover. This is an interesting trade because we're in a situation where we have a potential buy signal setting up for us. We've only got about 10 minutes, though, until the CPI number comes across the board. So I want to be very, very careful with this. This could be a very good pair to trade today. BOJ tonight. Bank of Japan's going to raise interest rates for the first time in a long time. So we've got a lot going on with the yen. So if you're looking at the dollar yen, you're probably right. I've got a couple of trade updates that I want to show you. And then also we've got to recap what the BOE did earlier and really brought in our Great Britain pound resistance level into view and turned out to be a really great trade. So we got a lot cooking here this morning early. If you're in the mountain time zone here in the United States, then you know exactly how early it is. I've been up, like I said, on these early news days. I'm usually up about 4:30 a.m. So that's it. I'm not sure we're Marines, but we're going to get more done by 9 a.m. today than most people will get done all day. So it's good to see everybody back in the room and out in YouTube land. Let's see Robo Smart. Good to see you, Robo McQueen. Hello, boss. How you doing, McQueen? Good to see you. Steve McQueen, famous. Let's see Fadila. Good to see you, Fadila. Welcome. FX Kid. Yo, what's up, FX? You guys have any questions, be sure to ask. You have any markets you'd like me to look at, be sure to ask as well. Ruben. Hello, boss. How you doing, Ruben? Let's see. Justice. All right, Justice. I like that. Hello, how are you? And Liquidity Hunter. Hello. I'm doing very, very well. Liquidity. Bobby Bob over in the How to Trade community. Good to see you, Bobby Bob. Welcome. Lita. Always good to see you, Lita. Got some dedicated traders over in the How to Trade community that have been with us for a long, long time. So it's always a pleasure to see them tune in and ask questions. Typically, there's some great questions that come across the board. Erdar, hello. Harbor Monday. Man, I'm bad with names, but hello, how you doing? Okay, guys, Andy Tong, good to see you, Andy Tong. I can say Andy. And Roberto Salam, good to see you, Roberto. Welcome. All right, guys, let's go ahead and dive into our lineup here. Today is going to be all about CPI, the BOE, and ECB. There's a lot going on with our news announcements here in about 9 minutes. We've got a lot of numbers coming out all at once. We'll recap them when they're finished, but the big one's CPI. Start with the trade update. Trade update, I said U.S. oil's bearish ahead of Thanksgiving. This trade update took 21 days to set up. This trade was one that we had spotted a long time ago, and it turned out to be a major, major winner for us. Remember, the long time frames give you a better chance to win. Long-term levels, macro levels, are a heck of a lot more reliable than 1-minute charts. And we showed you 15-second trading yesterday. I would much rather just bet more on these long-term trades as opposed to sitting there and going back and forth with the machine all day on a 15-second chart. That's just my style. You may really want to trade as many times as you can during a day. Go right ahead. It's all up to you. It's all up to you and how you do it. So I want to get right out and get started with this. This was a good one. We were buying 55.29s, and you can see, I mean, the market did exactly what we thought. We were looking right in here about 55.29s. There was our bid. We were looking for about 45 pips on this, and it was a pretty easy 45. The low here was 54.98 in U.S. oil, and then you got the big bounce right back up there to 56.98. It was a damn fine trade. If you got that one, you were definitely correct. We just had to give it a little bit of room to breathe initially, about 25 pips, which if you've ever traded crude oil is nothing. It really is not much of a draw at all, but there you have it. A nice big sell-off that developed back on the 16th of December, a couple days back, went down low, 54.98. Bidders stepped in, protected 55, and now we sort of headed higher from there. So a lot going on here in WTI crude. Remember our market drivers. We're watching for any news out of Venezuela. Typically, a dovish dollar is going to mean higher crude oil prices, but this turned out to be a very good trade and one that I was extremely happy with. All right, in other news, we had the BOE spoke a little bit earlier today, and the ECB, I believe, just dropped their knowledge on us as well. A lot going on right now. But the BOE came in, and they decided to cut interest rates. They cut them by 0.25%. The BOE rate cut vote, though, was only 5-4. Which means that is relatively close. That means if there were some folks that wanted to cut, some folks wanted to leave the interest rates where they were at. So the BOE is trying to make up for lost time. They're trying to bring their prime rate, the prime rate in England, in England, they want to bring that down to where we sit, where we are, basically, in the rest of the world. The BOE has sort of been a hawk, and that's something that we need to be aware of, is a lot of these folks, they'll wait towards about the end of the year, and they'll start making their moves, and that's exactly what we saw out of the BOE. So a lot of good stuff there. If you're trading the Great Britain pound, you saw exactly what occurred. And what it was a little bit of short-term volatility. So let's go to another trade update. This would be our JOLTS job openings. This was out about a week ago. We talked about the resistance zone that could have been in play for the Great Britain pound US dollar. And, well, here it is. We hit it perfect. We absolutely hit it perfect. There's our weekly chart. Our top right there was about 134.52. We were selling 134.45s, 44, somewhere in there. And if you take a look at the daily action, there it was about 2 days ago. 2 days ago, you went up there, hit that thing perfect, and came off big and paid us off our 60 pips. So, this trading week is panned out to be pretty good. It's panning out to be pretty good. So you definitely want to be aware of what you're doing, because there's still good trades to be had, but I only believe that's going to last about another day. All right, let's see. We had a question in the live chat. Which broker do you use, sir? I use a lot of different brokers, Riaz. I use a lot of brokers. If you're interested in getting started in trading, the one that I recommend is Switch Markets. This has been a partner firm with the How to Trade community now for about 9 months, 8 months. And so if you're looking for a broker, a place to get started on the Forex, head on over to Switch. You can see a brand new website, lots of resources and tools, free resources, so many things that can really help you get up and run. And we're going to talk a lot more about that in 2026. But this is a pretty good one. I mean, you can see all the markets up to 1 to 1,000 leverage. That's going to depend on your municipality. You've got awards. I mean, Switch has won awards. They've got a bunch of good reviews. Check out Trustpilot. Available on MT4 and MT5. There may be another platform coming in the new year, but you're going to have to stay tuned and wait for that. And it's got really everything you need to get started. So if you were looking to get started on the market there, Riaz, I would say Switch is a pretty good place to begin. Okay, let me see. Andy Tong, I'm short on the S&P 500. Well, I mean, there's nothing wrong with that. Let's go to the US 500 and have a look. If you're taking shorts right here, not necessarily the worst thing I've ever heard. I mean, it's not a bad trade at all. Let's get rid of all of our analytics here and have a look at this US 500. Something like this could be pretty lucrative, fairly lucrative. We got 4 minutes until our big number drops. I would say a pullback if you were looking to grab maybe a little bit more superior trade location. 67.95 up there is probably a pretty darn good resistance zone on the daily. As far as am I bullish or bearish, neither really. This time of year, I don't really think you're going to see any big moves in anything. But I could see why you're short, Andy. You could see that overnight high that sort of developed during your mid-London session right up here. So, I mean, the trade, to me, on an intraday is be pretty obvious. Your stop would be above the daily high, and then you're looking really just to bring this price down in maybe to your daily range, somewhere down into here. I see exactly what you're shooting for. It's not a bad trade. It's just now we're seeing bullish pressure. CPI is probably going to shake this up, and I would dub this trade as high risk. Holding anything, and I mean anything, through a release as big as CPI, that's a big one. That's a high-risk trade, no question about it. Okay, let's go ahead and have a look at our CPI numbers. Remember, we're just looking for basically CPI to stay the same. Now, we saw a lot of grandstanding last night by President Trump. He says that inflation has stopped. That's not true. The inflation still continues to grow, but it is slowing down. We have a little bit of evidence of that. We're expecting core CPI to tick a little bit higher. We're expecting it on a yearly basis to be flat, the same 3%. CPI month over month, we're expecting to remain static at 0.3%. CPI on a yearly basis, we're expecting to tick a little bit higher. Now, here's what you need to know about CPI. This is what you need to know about CPI, is it's still on a tremendous trajectory north. So to sit around and say that inflation has stopped is not true. You can see that we have just absolutely exploded since honestly, since the half-point rate cut last September, a September ago before the election, and that was something that was really irresponsible by the Fed, and I watched them do it and couldn't believe they did it. And since then, inflation absolutely skyrocketed this year. A lot of people are blaming tariffs. Tariffs aren't the reason for that. Maybe partially, but they're not the reason for that. The interest rate cut, the premature interest rate cut not last September, but a September ago. So, Babur, what am I expecting on the CPI? I expect it to come in a little bit hotter than we expect. I expect it to be high. This is the reason why everybody in the financial world is panicked. We're going to talk a little bit more about this. Right there at 2020, that was the COVID shutdown. We flooded the zone with unlimited quantitative easing, which meant trillions and trillions of dollars went into the system at 0%. And since then, we have not been able to control inflation. As far as I'm concerned, the powers that be dropped the ball. They did the economic world a great disservice. And I don't know that we can put the rabbit back in the hat. I'm awfully pessimistic that there's any way to stop what I call entrenched inflation. There's no question about it. The inflation is entrenched, and it's not going anywhere. As traders, what does that mean to us? Well, if they're going to cut interest rates, Trump alluded to that last night. He's going to have a new Federal Reserve chief that made the speech, and he said it's going to be somebody who wants to cut interest rates extremely low. We'll talk about that after CPI comes out. That is a point that I've been making over and over and over and over again this entire year. I'm surprised Jerome Powell is still the Fed chief by the end of the year. Okay, we've got about 1 minute left. I'm sort of looking at my markets, trying to figure out exactly what we should be looking to trade right away. As far as I'm concerned, trading anything during the CPI release is high risk. 30 seconds left. We've got a 5-minute chart here setting up on this dollar yen. It's sort of going to be my target product with our 920 EMA crossover. So let's go ahead. Let's take off all of our drawings. Let's take this down to a 1-minute chart and see what we have. And we will look at some of the other commodities as well. We'll look at gold. Silver has just been on an absolute runaway train, right around 65. Gold's off a little bit today. I do think that we're going to be in for some fireworks. Okay, there it is. So what did we just get on the CPI figure? I'm going to go ahead and see if we can get a live update. Let's see. Looking for that live update. What did we get? You can see that it was definitely a dovish reaction from this dollar yen. Probably not going to get any type of trading opportunity with our 920, at least not for a while. But you can see that potentially we may be looking to buy this thing back after a little bit of time passes. So that's what I'm thinking. Liquidity. I mean, right now you've got a big dump going on in the dollar yen. So the very first thing I would do, I would go back to my schematics, my long-term schematics, and I'd say, okay, where are we at? So I know I've got a great big support zone down there at 153.14. We covered that in our picks of the week. That would be a pretty good one. However, if I wanted to trade right now, I go right down to my daily time frame, and I'm going to go spike low to my spike high, and you can see that our bottom hit it absolutely perfectly right down about 155.36. So what can we really do to trade right now? Well, I could put a limit order in down there again. We've sort of already missed our trade. That's why you've got to be ready with your macro levels, or you can miss them. But this right here was just an absolute pullback. Let's go ahead and take a look at that 1-minute chart, and that's exactly what happened. You went right to 38% and you bounced up. Now do we get our trade again? Do we get another chance at it? I doubt it. But let's go back to our daily. Tremendous level. So in order to trade this thing, we'd be looking for a buy limit order, and I would be putting this limit order right above that 38%, probably right around, 37, something like that, 40. So let's go ahead and put that in the queue, buy limit order, and see maybe if we can get filled the second time down. I don't like doing this at all because the trade was already pure. It was perfect. It bounced. Now, if we're waiting around to get it again, typically we're late, and if we're late, we lose. That's been my experience. So good pull there. Liquidity, it was perfect. Let me see. OVO is, I'm very bullish. Good to see you. Your analysis on gold today, Riaz. Yeah, I'm going to go ahead and dive into that. Where can you see the CPI release info live? Well, I'm watching for the release right now. I think they've already dropped it. I'm just not getting my updates. It does not surprise me. Probably a Cloudflare issue. I've been dealing with those a lot the last 6 weeks. Let's go ahead and have a look, though. All right, here's our CPI levels coming out. All right, right here. We still don't have a core CPI update. It was late. I mean, these people are just really, really messing with the markets right now. Okay, CPI year over year came down to 2.7%, which is down from 3.1. I'm not seeing any monthly figures on the update right now. So 2.7%, that was way beneath what we expected. That's extremely dovish for the United States dollar. That means that you're going to get rate cuts and you're going to get them in a big way. Let me see, Jeanette E. Good to see you, Jeanette. Welcome. So what do we, if we're going to trade, if we're going to go ahead and trade this dollar right now today, the biggest thing we have to realize is that that's a major dovish figure. So do we want to buy this thing or sell it? Daily chart, you'll see the DXY really, really tightened up. Let's take this down to a 1 minute. You're probably going to want to sell. So if you're interested, you know, there's your spike high on the 1 minute. There's sort of your low there. You're probably going to want a good selling trade location to try to get in on that dovish dollar. So what's the best way to do that? Well, you could target the majors. You could try to trade this dollar index just straight up. I don't necessarily recommend that. But what I do think is going to happen here is you're probably going to trickle back up into here somewhere, maybe 98, 98.39, 98.35. Let's go ahead and see if we can find something else to trade. This is interesting right here. 1 minute chart. I'm on the Euro dollar or Euro USD, and you can see the pullback zone right there is 50%. Beautiful. Nice big bounce. You'll notice the Euro USD does hit 50% a lot. It definitely does. The problem with trading the Euro USD right now is you've already got your ECB monetary policy decision came out just a little while ago, and that right there, they held the deposit facility rate at 2% and the interest rates at 2.15%. So right here, you'll notice that the ECB held rates where they should have held them about 15 minutes ago. That really brought that huge spike into play here. Back in here, brought it right into here. This rally was from the ECB, and then what did you have? The big CPI level there. So we're sort of in an interesting, I wouldn't call it no man's land, but we're in an interesting position right now to be trading the euro. I would back off to a longer time frame chart. You can see right there our coded 920 EMA. Right there was our buy signal, and now we're pulling back and we're rolling sort of to the top side. For me, I'm not really interested in trading the euro right now. There's too much going on. Let's try to find something that's just a little bit cleaner. So there's your dollar yen. It doesn't look like we're going to get our level, which is a damn shame. That was a great trade. If I would have been doing my homework, we'd have been lined up and ready to go with it, but I missed it. So we're just going to have to move on with that. Let's go ahead and take a look at something else maybe we can really sink our teeth into on a short time frame. We still got our order down for that yen. I don't think we're going to get it. As a matter of fact, I'm positive we're not going to get it, but we'll leave our order in. This is what we were talking about just a second ago, Andy. When you're short going into these events, it's really difficult to get a bead on what the market's going to do. A dovish CPI, which is what we saw for today, really is going to be a bullish market driver for equities because it means rate cuts. So if I'm looking at the US 500, you may want to consider the other side of this thing, which I believe we had a good sell signal way up here, right up here at 67.95. Maybe time to buy this thing on a pullback. Let's take a look at gold. Here's gold. What we have happening here in the gold market is absolutely fantastic. Let's head on over to our Switch Markets MT5. And what you'll see here is you have two daily charts. You've got gold on your left. You've got silver on your right. Okay, the biggest thing we have to realize here with gold and silver is silver's going up a heck of a lot faster than gold is. Now, gold, very near all-time highs. I'm still extremely bullish gold. I'm more bullish silver, but these levels are absolutely huge. So when we see something like a weak CPI, what does that mean for gold and silver? What does it mean for commodities? It's very simple. When you have a CPI that is low, which is what we got today, it is bearish for the USD. That means it's going to have weakness against the FX majors, and it's going to be weak against commodities. Commodity prices are going to rise. Stock prices are going to rise. Why? Because you could see a lot of rate cuts that are going to bring the monetary policy back into balance with what's happening with inflation. I know that's a difficult relationship, but just remember, a weaker dollar means it takes more of your dollars to buy your gold and silver. Crude oil, all of it, commodities in general, are bullish when the dollar's down. Now, what we have really developing here with gold is sort of some nice daily compression. We have an opportunity potentially for a breakout and new all-time highs. I want to try to figure out a way to buy this thing. So we're not going to be able to do that typically on a daily. We probably already missed our trade. You can see really, really tight Fibonacci there. It looked like it worked perfect, though. Yeah, there it is, right to 38%. So just basically like the yen. Let's take this down to a tight time frame because we can make a little bit of money if we get in on a proper pullback. So right here, here's your 5-minute chart. Okay, 5-minute gold chart. There you have the big break. Sort of now we're coming back down a little bit. We bounced sort of off of this CPI bar up just a little bit. Let's go back to our 920 EMA crossover. Now you can see that our dollar yen is building into a buy. Let's go here to our gold. What do we have on gold? 1-minute chart. We don't have much of anything. We don't have much of anything. Our crossover actually was before the news at about 6:18 my time, so about 12 minutes before the news dropped. So now we're just headed higher and higher and higher. How do we want to trade it? Well, I mean, you could just buy it probably and get away with it. The problem with that is you could take a really big draw, and I don't want to see anybody go for the ride on this one. You don't want to do that. So we need good trade location. So we already missed our daily pullback, which is down in here, and that's fine. We didn't know that was coming. How do we want to trade this thing right now? Well, you can take it down to a 1-minute chart, and you see exactly what's happening with the price action. We're still very bullish. That was a bullish read. We can work some Fibonacci's that are based just on that CPI bar. 43.30, is that a pretty good trade? It's dirty. I mean, it's a dirty long. There's no question about it. And the reason why I say that is because it's been traded repeatedly. You know, you'd want like a 43.26. That would be a good trade to me. Somewhere right down in here, this would be a good trade. And the reason why, you're right around 43.25, 62%. 62% of our CPI bar is going to give us a pretty good trade. So let's go down here. Let's put a buy limit order in. And let's go ahead and bring this right down to the back end of what we call our Fibonacci golden zone. And let's put that in somewhere right around 27. Now, will we get an opportunity to buy that? More than likely, yeah. This one's probably going to come into play, and it's probably going to happen relatively quickly. So we're watching a couple of different things. This trade would only work as long as this range is sort of represents the extremes of our CPI. Very important that we understand this range is very, very, very critical to today's trade. What we could have here potentially is the beginning of a big breakout. You can see retail is holding longs right now, and they're betting that this range, this CPI range, is going to be potentially that low is going to be the low we see for the rest of the session. That's what we're seeing. Personally, I don't like trading that way. I think it's awfully difficult to be consistent. You can win a lot of those trades in a row, but you can also lose, and when you lose big. So I don't want to see anybody giving away money trying to say, okay, I want to be long. Well, you could be right by being long. I mean, you can say, okay, I am right here, and you may be. But you don't have the capital to hold on to this, especially if it's a leveraged position, a highly leveraged position. What I'm telling you is to be very careful here. All right, be very, very careful here. I want to read more about CPI. I want to hear more about what the report said. We should be seeing the news releases here anytime. It's been about 10 minutes. Okay, let's go ahead and get out to our news feed and see if they've got these numbers up yet. Okay, so right there, 2.7% year over year, and they released the CPI index, core CPI. So we did not get the monthly numbers. That does not surprise me one bit. I mean, that has just been the way of it. So we revised everything down on a yearly basis. I don't see the monthly numbers anywhere, and that's absolutely unbelievable. Okay, back to our gold market. Gold has just made another leg up. We've broken out of that CPI range. So what do? We get rid of that analysis, and we go with some fresh analysis. And now I know that I want to be bullish. There's no question about that. So how can I get long? Fibonacci retracement, spike low to your upper extreme. And you're going to drag that buy limit order right in there and just shade just above the top, just above that support zone. As long as that holds, as long as that area holds right here, right around 43.37, then we've got a pretty good opportunity to bid this thing. What do I want my take profit to be? Well, if we're going to go about 43.34, I'm probably going to want to take probably $3 off of this, maybe $2. Something like that would probably be a legitimate profit target. Now, ignore my leverage. We're using very, very small leverage because that's, pretty much what we want to. I don't know. I mean, it's just demo money. It's not real money. If this was real money, we would probably be making a much larger trade worth a little bit more. So something like this, let's take this up to about a 1-to-1 ratio, somewhere right in that zone. Now, the market is coming our way. The market is coming our way. Now, there's a lot of different ways that we can do this. We could extend our stop loss down here beneath the 62% and make this a bigger trade, a more expensive trade. If we do that, we've got to get more on a profit target. So for me, I'm going to go ahead and stick with this trade. I like the structure of it. It's not a bad one. It's okay. I think you're going to get some love right around 38%. I would be surprised if we don't get a significant bounce off of that level, and more than likely a rally up to our profit target. Okay, now here comes the selling. This is exactly what we want to see. Here's the sellers. The sellers are starting to say, okay, we're coming back down a bit. You're back inside of this CPI range. Still a pretty good breakout trend play for us. It looks like it's wiping out some of the retail longs. Remember what I just said about buying in. If you bought in up here, you had to go through all that 1 minute pain, and that's a pretty good sized bar just for a 1 minute chart. A lot of volume in here. Okay, right here we should get filled up. We're seeing some of the bearish participation come into the market, which is exactly what we want if we're going to get this trade. You can see we were very close right there. We're going to get filled up. It looks like right now we should be getting long here any minute. Okay, that should have filled us. All right, we're officially filled. A lot of bearish pressure. I don't like it immediately. Right there. There's our kick and there's our bounce. That's exactly what we want to see. Absolutely fantastic off of the 38% retracement level. You've got a very, very strong bullish market here. We went up to our take profit and we got filled up. Guys, that's Fibonacci's 101. That's exactly how you do this. If you have any questions, head on over to How to Trade. Send me a private message. I'll point you to some of my materials on the Fibonacci retracement sequence. That's as good as it gets. I've been doing trades like this on live stream for 4 years. And believe me, when I tell you that when we're talking strategy, when we're talking Fibonacci's, if you learn how to draw them correctly and you know when to trade them and you understand what a trend is and what it isn't, you can do stuff like that. We just did it. So beautiful trade. I just want to recap. 1 minute chart, great time frame for a highly active market. Nice big rally right here. Pullback was right to our 33 level. We hit it perfect. We bounced up. We got paid. An absolutely fantastic scalp. All right. So as far as gold goes, you need to start really thinking about a big bullish day. Now, if you look at your tote board over here, gold is about, you're down about 0.03%, about 92 cents. That means you're flat. That means you're flat on the day. Look for this thing to start breaking to the positive. If it breaks to the positive, especially because we're above that CPI range, look out. We could go very, very high here. As far as my analytics go, on a bigger time frame, the rest of the day, probably the rest of the week, you've got to be cognizant of a couple things. Yesterday's high, you've got to know exactly where that is. And then also these all-time highs right up here. You need to know exactly, well, they're not all-time highs, but you can see this area right in here on the daily, these big liquidity sweeps. You need to know probably where your weekly high and your daily high, but more importantly, right there, you've got to have where that all-time high marked. You got to know where that is. You can see this compression, guys. And, if you're a chart pattern aficionado, you're looking at a bullish pennant. No question about it. What do pennants mean? What do pennants mean? They're bullish. You're looking at a bullish breakout here. Why would a pennant form right there? 43.50, big round number. You can see the sellers have stepped in and defended that zone once, twice, 3 times a lady. There they are right there. There's the sellers, there's the sellers, there's the sellers. And now we've got the catalyst. We've got the CPI number that is light in the loafers. It is low. That is bullish for your metals. Metals are going to move higher. It's just a question of when. So for me, I'm looking at 43.50 going, does that hold again today? I don't know, but I bet you we test it. So keep a close eye on gold. This is a bullish pennant. The reason why a bullish pennant's set up is, number one, you have bullish price action. Okay, a lot of bidders in the market. But number two, 43.50 is the game. That's where the key level is. That's where the sellers defended it. And now you're looking potentially to move higher. Once you move higher past 43.50, you're going to all-time highs. 43.80, no question about it. You're going to challenge these tops up here. And then after that, what are we looking at? 4,500 will be the next big one on your radar. That could happen by the end of the year. We just have to be cognizant that there isn't as much volume as there's been. But that right there, pretty good stuff. Let's go back to our yen, our dollar yen. I don't want to get too far away from the yen. Okay, so the bearish action is still there. Now, why would the yen be coming off? Why? Because you just had light CPI, which means you're probably looking at rate cuts for early 2026 for the U.S. dollar. That's bearish for the dollar. What's going to happen during this coming overnight session? You're going to get a rate hike out of the Bank of Japan. That means the yen is going to get stronger than the dollar from a fundamental perspective. What do I mean by a fundamental perspective? It means that when one central bank is going to cut interest rates and the other central bank is going to raise interest rates, you're going to have some disequilibrium in pricing. That's what you're looking at for the yen. So is today likely to be a bearish or a bullish day for the dollar yen? It's probably going to be bearish. So we've got our buy limit down here on our daily. I'm just going to go ahead and take that off. We missed the trade. Would I have a problem taking this on a 1-minute chart if we get our 920 crossover? Not at all. Not at all. Now, where would my stop loss be? Well, right here, our RSI, Relative Strength Index, for confirmation, gives us a good opportunity to set our stop loss down here at 155.36. We'd be buying maybe like 58s or 60s. It's not a bad position trade for the rest of the day. It's not a bad one. The problem is you're fighting the fundamentals, so I don't love it. I would watch it relatively closely. If you want to scalp that, go ahead. But don't, I wouldn't be risking a tremendous amount of money thinking the dollar yen is going to rally today. I don't think you're going to get that. All right, let's go ahead and break this down a macro level. I did some analytics there over on the Switch Markets YouTube that showed you what to expect for this week. And the dollar yen was on that radar. And right here, it's very clear, very clear. You've got spike low, spike high, pullback zone right around 153.13. So if you're in that level, if you're in that area, that's your bid. 153.13, 153.25-ish. Now, right now we're trading 155.51. That can change. If the dollar yen comes off BOJ, if it comes off during or after the BOJ, that's probably a great bidding location, and it's one that we haven't really seen yet this month. So I'm highly interested in that. I think that's pretty good. Let's see. XYZ says up. All right. So let's take a look at what the media says here. I'm going to go ahead and run a couple Google searches, or we'll see what CNBC is saying about inflation. Keep in mind, they're not fans of Trump, so anything they say is going to probably downplay this inflation. Okay, here we go. November consumer prices rose at a 2.7% annual rate, lower than expected. And here's your snarky headline. Here's why not everybody experiences the same inflation rate. Well, the bottom line is this. Trump came out last night and said inflation's going down. That right there shows you that inflation's going down. If inflation goes down for real, and you see it really across the board, and you see it in things like rents, house prices, food, if you see that develop, it sets the stage for rate cuts throughout 2026. And if you get those rate cuts next year, you're going to see things like crypto. You're going to see things like stocks. They're going to explode to the top side. And, big picture, what does all of it mean to the economy? It means the economy is going to grow. The question really is the economy going to outgrow inflation, which the jury's still out. But that report right there is exactly what the Trump administration wanted to see. They couldn't have got a bigger Christmas present, that's for sure. November consumer prices rose at a 2.7 annual rate, lower than expected, delayed data shows. Let's see, the consumer price rose by 2.7 annualized last month. A delayed report from the Bureau BLS reported economists polled by the Dow Jones expected CPI to have risen 3.1%. That means that expectations were really poor, and this report outperformed expectations by about 0.5%. That's a big number. That's a big number. Core CPI, which strips out volatile food and energy prices, was also cooler, increasing 2.6 over 12 months. So, I mean, it's a positive number. There's no question about it. The big thing, year-over-year percentage change from 2021 to 2025. This is when you really saw it, 2022, right there in June. Really the upward trajectory of our dovish policy after COVID, and then you've seen CPI sort of come down since then. One thing that I would really, really stress, though, is when you see a chart like this, you say, okay, Shane, you just showed me an opposite chart, and I'm going to show you that chart again. Remember, these are growth numbers. Okay, so when you have a CPI of 9%, that means prices are exploding, and that's still related to the COVID era. All right, that was things coming back online like fuel, like food. When they reopened the world, basically, consumption on everything restarted, and that's great. Inflation, the price, the month-over-month and year-over-year inflation, of course that's going to be higher because your demand spiked. And since then, everybody's going to look at this chart and say, see, we're getting it back under control. We're down to 2.7. We were at 9. Here's the issue. Let's go ahead and refresh this again. The CPI, Consumer Price Index, this is the raw number. This is the one people should be focusing on. The Consumer Price Index of the United States decreased to 324.12 in November from 324.8. That is huge. The annual inflation rate came in at 2.7. Okay, so when we're not talking growth, what are we talking? Number came down. This is our raw inflation rate. This is the raw index number. Boom, 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 boom. We've been consistently making all-time highs in that regard for a long time now. Every month, it's been a new all-time high. So when somebody goes, well, it was 9% back in 2021, and we've got it way down, the problem is that's just the growth rate. That means that inflation's not growing as fast as it was. It doesn't mean that it's still not incredibly high. And what you got right there is September 324.8, and now we came down. That's the first retracement in your raw index data in a long time. Let's go to our 3-year chart. You haven't seen a retracement, really. We had one in December of 2023. We had a slight one there, a very slight one back in November of 2024, and the prices absolutely exploded this year. This is the first real step back in that regard in about a year. And the Fed, remember, the Fed cut interest rates by 0.5 point right there in September of 2024 because they believed the inflation problem was over. That was complete BS and nonsense. Inflation's still very much an issue. It's a good step in the right direction. What do we get now? Hard to say. Hard to say. Good to see you, Ahmed. Welcome. All right, everybody. So that's about a wrap. That's about a wrap for our CPI. I think that was a very, very, an absolutely rock solid trade that we nailed on the gold market. And now you can start to see our daily pennant is taking over. The pennant is coming into play. You can see that daily right beneath 43.50. We're going to blow that out. We're going to blow that out of the water. Once 43.50 is gone, you're looking at 43.80s. That could be in the next few days. It could be as early as tomorrow. And then after that, I think 4,500 is going to be on everybody's mind as we roll into the new year. A lot of really good stuff happening in the gold market. If you got long early, I know we have one trader in the room that got long silver back in October, and this has just been an absolute gift. So if you're long metals, well done, well done. All right, you'll also notice WTI crude oil up a little bit on the day. We're not going to worry too much about that. It's in compression right around 56.10. I think that's a pretty good level. If there's any other markets you guys want to look at, we can go ahead and look at them. I think that it's an absolutely a big number that dropped today. I wouldn't call it historic necessarily, but I really would say that it was huge. It was absolutely huge. No question about it. I'm not necessarily sure what exactly everybody's saying on the social media. It's probably got to be relatively good because it's just a staggering figure, an absolute staggering figure. So there you have it. There's your inflation figures delayed. the last installment of 2025. Pretty interesting stuff. I mean, as far as, what are our interest rate expectations? We've got a meeting coming up in 41 days. I will be there. We'll have FOMC live. So what do we expect? We expect rates to be held firm, about 71%. That's a not so fast, my friend. You may get a rate cut. Especially if inflation's coming back into view. Those odds are fading just a little bit. It really does all point towards, see the rate cuts are supposed to start in March. It really does all point towards a real dovish 2026. It's something that, we'll show you exactly what's going to happen here. Trump, FOMC chair. This was the talking point last night. Trump says next Fed chair will believe in lower interest rates by a lot. Trump officials raised doubt by Hassett. That means he's not as dovish as Trump wants. How Trump's Fed attack set the stage for the central bank's biggest test. Fed candidate or chair candidate Waller says he will absolutely stress the importance of the Fed's what? Fed's independence to Trump. So that's not going to work. They're going to put somebody in there that is absolutely a dove. And my prediction right now, I'll see you guys next Christmas, but my prediction right now is the U.S. prime rate's going to be about 2.25% to 2% by this year. Next time, you're going to see probably another leg up in the stock markets. The stock markets are going to keep going higher. Bitcoin's going to be probably up around 150, 140, 150. That would be a conservative estimate. I like crypto to rally. I also like stocks to rally. But what is going to be the real issue is the inflation. Can they keep inflation under control and actually make it come down? Maybe cut inflation growth, maybe no growth in consumer prices for 6 months or 7 months. Can they do that? I don't know. So let's see, Jeanette. Thanks, Shane. Have a great break. We'll see you in January. I will do, Jeanette. Thanks for joining me. Steve Francis, thanks. Yep. Okay, guys, I'm going to go ahead and sign off. We've been going long enough. Cheers for your thoughts today. Absolutely, Grant. Thank you. Let's see. Ahmed, the Nikkei went up with CPI despite tomorrow the BOJ rate cut. It's a BOJ rate hike. It's a rate hike from the BOJ. The Nikkei is going to go up because, the Nikkei just goes up typically when there's anything dovish in the world. That's for sure. All right, pray for true justice. I like that name. We need some justice these days, that's for sure. Can someone tell me where is the official CPI and revisions posted? Yeah, let's go ahead and do it. You're going to go to the BLS website. So what you're going to do is just Google CPI BLS, U.S. Bureau of Labor Statistics, and you'll see right there, there's going to be the report. I believe that they've got just a summary right here. So this would be the actual news release. The Consumer Price Index for all urban consumers. What if you're not an urban consumer? What if you're a rural consumer like me? See, that doesn't matter. Increased by 0.2% on a seasonally adjusted basis over 2 months from September to November, and it just is what it is. So if you're looking for typically your revisions are at the bottom. This is a weighty release. There's some contact information if you want to call them. 202-691-7000. Maybe I should get them on the horn, see if they want to go live and explain some of this stuff. In any case, you can see a revision of seasonally adjusted indices. They're revising the way that they calculate everything going into the next year. In any case, I'll go ahead and just drop the link right into the live chat, and we can go ahead and get that going. So check out the link if you'd like. That should help you out a little bit. All right, everybody, I'm going to go ahead and sign off for right now. Have a fantastic trading year. There's about a week or so, I'd say a good 2 days. Probably maybe tomorrow, maybe Monday you'll get some action, but I doubt it. Everybody's going to be off next week. We will be back January 2nd. I will go ahead and post the live stream schedule in the news, not the news section, but the upcoming live streams over at How to Trade. It's been a long year. I'm looking forward to getting a break. Today started very, very early. So I want to congratulate everybody for navigating CPI well. If you had a great trading year in 2025, I'm happy for you. If you had a bad one, There's another one right around the corner. Remember, our best trades are always tomorrow. Our best trades are always next week. Our best trades are always next year. So if you need anything at all, reach out to me. Private message over at howtotrade.com. That's always a fantastic place. You can reach me. As far as our schedule, I'll see you January 2nd. All right, everybody, it's been a good year. We'll have some predictions coming out early next year that could be pretty good. Until then, trade the action well. Have a Merry Christmas and a Happy New Year, and we'll talk soon. See you.